SARFAESI Act, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002, is one of the most powerful legal tools for lenders in India. It allows banks and financial institutions to recover bad loans, NPAs, non performing assets, efficiently by taking possession of secured assets without court intervention. Key objectives: enable banks and NBFCs to recover bad loans faster, reduce dependency on courts for debt recovery, strengthen the financial system by lowering non performing assets, NPAs, improve credit discipline among borrowers. 2. Loan amount applicability under SARFAESI. The SARFAESI Act applies only to secured loans and has the following loan amount criteria. Minimum loan amount 1 lakh rupees. Loans below this cannot be recovered under SARFAESI. Minimum NPA threshold. The Act cannot be used if the remaining unpaid loan amount is less than 20% of the principal loan amount and interest. Applies to secured loans. Only the loan must be backed by immovable property, machinery, stocks, or other tangible assets. 3. Point: who can use SARFAESI Act? The SARFAESI Act is applicable only to certain lenders and cannot be used by all financial entities. Eligible lenders: banks, public and private sector, financial institutions, FIs, non-banking financial companies, NBFCs, if approved by RBI, housing finance companies, HFCs. Not applicable for unsecured loans, personal loans, credit cards, etc. Loans below 1 lakh rupees, small cooperative banks, unless notified by RBI. Agricultural land cannot be seized under SARFAESI. 4. How SARFAESI Act works in lending. Step 1. Loan becomes an NPA. If a borrower fails to pay EMIs for 90 plus days, the loan is classified as a non-performing asset, NPA. Step 2. Lender issues demand notice. Section 13(2). The lender sends a 60-day notice to the borrower demanding full repayment. The borrower can either repay, negotiate, or raise objections. Step 3. Possession notice. Section 13(4). If the borrower does not respond, the lender can take possession of the collateral, e.g., house, land, machinery, etc. A public notice is issued stating the lender's right to sell the asset. Step 4. Auction and recovery. The lender can auction the asset to recover the loan amount. If the sale amount exceeds the dues, the extra funds are returned to the borrower. If there's a shortfall, the borrower is still responsible for the remaining amount. Key documents required under SARFAESI 1. Loan agreement confirms the borrower's repayment obligation. 2. Sanction letter and repayment schedule specifies loan terms and conditions. 3. Security agreement defines the asset pledged as collateral. 4. Demand notice under Section 13(2). Official communication for repayment. 5th. Possession notice under Section 13(4). Legal notice before taking over the asset. 6th. Auction notice. Details of the public auction for the asset. 7. Encumbrance certificate. Ensures the property is free from legal claims. 6. Importance of SARFAESI for lenders' faster recovery. Avoids long legal procedures. Legal protection. Empowers lenders to act against defaulters. Improves lending confidence. Banks can issue more loans with secured recovery options. Reduces NPAs. Helps financial institutions maintain better balance sheets. 7. Borrowers' rights and challenges. Right to object. Section 13(3)(a). Borrowers can challenge the lender's claims within 60 days. Right to appeal. DRT and DRAT. Borrowers can appeal to the Debt Recovery Tribunal, DRT, within 45 days. Fair sale price. Borrowers can contest undervaluation of assets. Redemption rights. Borrowers can settle the dues before the auction. 8. Limitations and risks in lending. Under SARFAESI 1. Not applicable for unsecured loans. cannot be used for personal loans, credit cards, or business loans without collateral. 2. Legal delays. Cases may still face challenges if borrowers contest the recovery process. Third, property disputes. If the asset has legal complications, recovery becomes difficult. Fourth, market dependency. If property prices are low, lenders may struggle to recover full due.